Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a couple of trade ideas that I'm monitoring. So let's jump straight into the charts and take a look at what's going on. You can see here we've seen quite a violent move lower in euro dollar this morning, which pretty much, if I just show you the Dixie, it's sort of more indicative of a broader dollar strength that's taking place. The Dixie's up 1.3%. Euro dollar's down 1.3%. Now, this is the first time that US markets have been open this year. And it seems there hasn't really been any fresh news or fresh fundamental developments to drive this. So it very much seems to me like this is positioning related. We had been steadily creeping higher and higher and higher throughout December, and it's been going on for weeks and weeks now. So it does seem to be positioning related to me, which means I don't think people should be looking too much into a move like this. So how do you trade something like this? Well, for euro dollar, the pace at which euro dollar had been rallying had been looking a little bit unsustainable. Like we'd been in an uptrend from late September to early November. This uptrend here, which I've just marked up. We then broke above that uptrend and then accelerated to the upside at an even faster rate, which I don't know if you guys remember, but a couple of weeks ago I was calling the rate of that rally unsustainable when the RSI actually went into overbought territory. But it looks like we're correcting a little bit on this move higher now. We're back below the 21-day moving average there, and I'm looking for potential areas of support to start re-entering dollar long positions. I'm thinking this potential area, which I just marked up, could be quite nice around the 104.50 area. You've got a bit of a balance area here from November to early December. You've got a retest of that previous uptrend. You've got some moving averages, the 50 and the 200-day moving averages coming in just below it as well. You can start scaling back in this area. Why would you want to scale back into euro dollar longs? Well, that's, obviously you have to have a fundamental mindset for doing this as well. And we do have some very big, important US data coming out later this week, which I'm expecting to show. Well, we've got the labour market data, which is expected to show that the US labour market remains robust. That we already know, but the ISM data should, in my opinion, point to further weakening in the US economy. Not a US economy in recession, because you've still got the ISM services PMI, which should remain well above 50. But the manufacturing PMI should come in under 50. So I don't expect this week's data to really push back against the idea of an eventual Fed pivot coming later this year. As the US economy eventually slips into recession, which seems to be what most people are expecting now. And that means that I think that crosses like euro dollar should remain a buy on dips. But anyway, we'll be seeing what happens with this data later this week. If it's all much stronger than expected, then you could quite easily see a push through these levels. In terms of what else I'm looking at, we're still within ranges for US equities. There's a nice area of resistance still in the 3,900 area for the S&P 500, which, ahead of the data that we have coming out Wednesday through Thursday, I think this range is going to very much remain in play. So any challenge of the 3,900 area, I think would be nice to sell. If this week's US data comes in weaker than expected by a substantial margin, then it seems as though the market's probably going to be in a bad data is good data mindset, because the big thing that they really want is for the Fed to take an easier stance. So that could send things back into the 3,900s. But if the data is robust and argues in favor of the Fed continuing to go hard, then I think this range, or a drop towards the bottom of this range, is probably likely. Finally, let's take a quick look at oil. You can see that it's stabilized here, just below recent highs, just below its 50-day moving average as well. we're kind of in wait and see mode for OPEC, which we've got this week, which hasn't really been the main driver of oil, to be honest, in recent months. Oil has been much more focused on the macro picture. Look, China reopening, which has been helpful, lifting oil $10 off of recent lows. But you've still got a lot of people expecting the US, Eurozone, Chinese economies all to continue slowing or remain stagnant or suffering this year. Um, so, the argument for a big push higher above these levels here in the 82, 83 area I don't think it's particularly strong. Because, if you did break above these levels, then you'd be talking about a move back here to the 93 area. But like I say, the macro picture doesn't really seem to be there. So I'd be looking for potentially, at least another drop back to this 21-day moving average, potentially in the coming days, subject to what happens with OPEC. But anyway, guys, hope you all enjoyed the video, and I will see you all in the next one.